This is Duke University.
Today we have three panelists here to talk through the implications of Bitcoin, kind of where Bitcoin's going. We have a pretty varied range of backgrounds and of industries. We have Professor Harvey here from Fuqua. I'll let each of them say a little bit about their background. We have Jon Hilsenrath from the Wall Street Journal, and we have Eric Martindale here from Bitpay. So if each of you want to kind of give a little bit about your background, your interest in Bitcoin, your experience with Bitcoin.
Sure. I teach finance at the Fuqua School. Actually, this year I taught a course in international finance, and it seemed appropriate to talk about things other than the euro and the yen. So I devoted a lecture to gold, and I devoted a lecture to cryptocurrency. And actually, it took longer to do the crypto lecture preparation than the entire course. So there are some barriers to entry here. I was also struck at a conference I went to, had about 100 economists, and somebody mentioned Bitcoin. And I tell you, if we took a vote there, basically it was unanimous that this was just a fad, a bubble. And that also kind of struck me that they're judging this based upon insufficient knowledge. So I decided basically to dig into this and really try to understand what this is. So that's where I'm coming from.
Great. Jon?
So I'm Jon Hilsenrath. I'm a Duke alum. I graduated in '89. I was telling Professor Harvey, I took one economics course here my freshman year, and it was the last economics course I took. I'm actually a journalist. I write for the Wall Street Journal, and I've been writing about financial crises for the last 15 or 20 years. And in particular, in the last 5 years, I've been covering the Federal Reserve. So I spent a lot of time thinking about money. What is money? How does it work? What does a central bank do? And how does it affect the economy and the financial system? So actually, when we come back around, that's what I'd like to frame some of my comments around, is pulling the lens back and putting in some perspective with a little discussion of what is money and how does this whole discussion of Bitcoin frame into our monetary system.
So I'm a software engineer by trade. I've been coding since as long as I can remember, and I'm an entrepreneur. Rather than choosing to go to college, I actually kind of bucked the trend and chose to start my first business immediately after graduating high school, and have gone on to do entrepreneurial startups effectively since then. As a software engineer, I've gotten very deeply involved in distributed systems, consensus, decentralized networks, due to the nature of the problems that I like to solve and the startups that I was involved in. I've been involved in Bitcoin since it was posted on the cryptography mailing list. Cryptography was a very interesting subject to me at the time, and I read the concept and I said, this is interesting. But honestly, like many, I may have just kind of like discarded it as an interesting thought. But then as the culture sort of grew, I found myself needing to commit to Bitcoin full-time in my entrepreneurial activity. So I started working for Bitpay, and that's why I'm here.
Great. So let's start with a question. Warren Buffett thinks that Bitcoin is a bubble, while investor Marc Andreessen has stated that Bitcoin today is like the internet in 1994. Two diametrically opposed positions there. Whose camp are you in and why?
So I'll give the economist's answer, neither. So I've got a lot of respect for Warren Buffett. Actually, it's kind of interesting. My research on gold, he's got a very strong view on gold also. He says that it's hugely overvalued. It's a bubble, a classic bubble. The price of gold right now is way too high. And in my gold paper, I kind of come down in terms of his view. So my analysis suggests that it is overvalued. And we've got lots of data. So we got like thousands of years of data on gold. Now, Bitcoin, I think Mark is kind of exaggerating, saying that it's like the internet in 1994, 1993. But we don't have any data other than a few years worth of Bitcoin. It's very young. And what I mean by the middle is that I don't think this is ever going to go away. The basic idea is a very good idea. The actual implementation of the idea today might be fleeting. So what we see today in terms of Bitcoin, the currency, might not be what it is in the future. But the basic idea, the advantages of efficiently exchanging property in a secure way, that is something that's going to stay. And for me, there's potentially lots of opportunity, especially for you.
I would posit that they're both right. So I would take the inverse answer from you, but come to a very similar conclusion. The internet was a bubble too, right? It still is a bubble. We had a huge bubble in 2000. We had the dot-com bubble, yet the internet comes back at a much stronger and reinforced place. And Bitcoin is directly analogous to this. Bitcoin has gone through several bubbles already. 3 years ago, the prices jacked up to, I think it was like $7, and that was unheard of. And then they crashed right back down to zero. And then again, they ran all the way up to $27, which was, a number of times more expensive than it had been previously. And then again, crashed right back down. Today, we're seeing the run back down to a median value of around $460 after the prices had spiked up to $1,300 in some markets. And we're settling right back in. So I think the economics of a bubble are intrinsic to the very nature of exciting ideas. And you guys may have heard this phrase, but you can't kill an idea. And I agree with you entirely. I think that now that this idea is out of Pandora's box, whether it's Bitcoin or something else, it's going to continue to grow. So I think they both have merit, and they both have very valid opinions. But I think this is just the beginning of what's to come.
Well, so I'd say I'm more in Buffett's camp. I don't think that, from what I've learned about Bitcoin, I don't think it solves the kind of fundamental problem that the internet solved. The instantaneous exchange of information everywhere and anywhere. Actually, I'm curious, when did Buffett say that it was a bubble?
When did he?
Yeah.
This was sometime, I think, late last year.
All right, okay, so, right, well, he's been ahead of the curve on that before, too. But, what I see Bitcoin as is an interesting experiment in a new kind of payment system. But I mean, what I'd actually like, I don't know if you mind, but if I could just kind of take a minute to just pull the lens back on what this is. Yes, I just wanted to talk a little bit about money, because that's basically what Bitcoin is being. We're talking about creating a new currency. So, I mean, just to pull the lens back 1,000 feet. So, when I think, in order to understand what Bitcoin is, we need to talk about what is money, right? So, money is a medium for exchange. It's a way for us to transfer basically our labor and our goods and to store them over time. So I'm a journalist. I provide a service to the Wall Street Journal, and I get paid for it in dollars. And I hold on to those dollars, and I use them to pay for lunch, to buy a new car, to pay for my home. 1,000 years ago, people, you might have gone to the market, and if you were a farmer, you might have traded, your chickens for a sack of potatoes, and all of this exchange happened in a marketplace. Over time, people decided that gold was a good way to store the value of their labor. So, if you were if you were raising chickens, and you wanted to use the value of the chickens that you raised to take care of all your other needs, instead of just trading it one for a sack of potatoes or a bunch of oranges, people would pay you in gold. And you would hold on to that gold and use it for other things. So over time, and gold had unique value in that people say it was a store of value. That doesn't mean that the value of gold didn't go up and down. What it meant was you couldn't destroy it. That it held its physical presence for long periods of time, and you could take it with you wherever you went. So over time, central banks have taken over that role. And we think now what we use as a medium for exchange is a dollar, our currency. In the United States, it's a dollar. In Japan, it's a yen. But really, when you think about what money is, it's an elaborate accounting system. It's a very elaborate way for us to keep track of all the work that we do and to store the value of that work and find ways to put it to work, to put it to work for us over time. It might be today, I might take my dollars and go buy a bag of groceries today, or I might decide to save it and use it in the future. Or I might decide to borrow from someone else who has money and promise to pay him back later. So that's the context, I think, that we have to think that Bitcoin potentially falls within. Now, so there's this idea that Bitcoin is this new electronic currency. Well, the fact of the matter is a new electronic currency. The vast majority of our financial system right now is an electronic currency. So the money supply, what we keep track of all the money in the financial system, it amounts to about $12 trillion. This includes, when we think of money, this includes the deposits that we have in banks. It includes the money that we have in money market funds. It includes, the paper currency that we have. Well, so of that $12 trillion of money that's out there, only 1.2 trillion of it is paper currency and paper and coins. So the vast majority of the transactions that take place in our lives is already in electronic and digital form. I think that's an important point for people to understand. And there's already a very elaborate system through which our money is transacted in banks, in money market mutual funds, in electronic payment systems like PayPal, Visa, MasterCard, American Express. I went up to New York the other day, and I had no cash in my pocket the entire time I was there. I only used my cash one time. I only needed cash one time to tip someone at a coat check. So the vast majority of what we do is already electronic. And so the final thing I'd like to say, one of the final things is just to put into context what Bitcoin is. From my understanding, the US dollar value of Bitcoin today is $5.6 billion. Now think about that against $12 trillion of cash that's in the of US dollar cash that's in the global financial system. Just to put that in perspective, and this is a very small phenomenon. So my iPhone is about 2 inches top to bottom. Imagine this 2 inches up against Mount Everest. That Mount Everest is the US dollar financial system as it exists today. Bitcoin is the 2 inches that this takes up. And I think the really big question for people involved in this industry is there something intrinsic in Bitcoin that puts it in a position to replace the payment system that we have in place right now?
Right.
And there was some talk about this double payment problem that Bitcoin solves. That might make it a lot cheaper, a lot more efficient, and a lot less expensive than the traditional payment system. But there are also, I think, huge barriers to entry.
Okay. So I think Professor Harvey has a couple.
Yeah, just a few things. So when we're talking about like something as big as the internet, I think we really need to focus on what this is actually doing. So the internet, you're correct, was this huge innovation in exchanging information. So I had some stuff, I didn't need to put it in the mail. I could instantly transmit it back and forth. And that was the internet at the beginning. I was using the internet well before it became popular because it was within various different universities. What Bitcoin does is it's not just an exchange of information. It is an exchange of property. That's something the internet doesn't do. So it's an efficient way to exchange property in a secure way. So that's what people are talking about when they're talking about this as being a huge innovation. Number two, it is a mistake to consider or to confuse Bitcoin with the lower B from Bitcoin with the capital B. So Bitcoin with the lowercase b is the currency implementation. It's what we usually see the picture of these Bitcoins. Bitcoin with the capital B is the network, and the potential is actually staggering as to what can happen. In this network, in this blockchain, it is possible to do things well beyond what we've talked about today in terms of contracts. I'm doing a talk at the law school at the end of the month. And basically, we can algorithmically put contracts into the blockchain that potentially could disintermediate a lot of what happens in terms of what the people do in the law school. So there's many possibilities here. And finally, yes, it's true. It's only $5.6 billion, right? Compared to 12 trillion. That's true. Okay, but that's today. And what we really care about is not necessarily today, but what is this going to look like in the future? Is there a path where this Bitcoin or whatever incarnation becomes really big and potentially challenges central banks? And frankly, in my opinion, the central bank's historical record is a mixed record at best. So, and you can hold out the US as a potential example when you've got $3 trillion of excess reserves right now, money being created, and I know we don't want to go into the detail, there's risk in terms of what will happen in the future. So this is different, it's decentralized, and it's secure, and it is possible that it's the next big thing.
Eric, do you have anything?
I'm going to expand on that just briefly. What you both said is absolutely correct. I think we're about to see the biggest value transfer that has ever taken place in human history. That $13 trillion is built in the legacy financial infrastructure that has been built up over the past 10,000 years, starting with chickens and sheep and moving to gold and ultimately into the central banking system that we've developed today. Something fundamental has changed over the past 30 years, and that's the creation of the internet. Now that we can transmit value instantaneously, information instantaneously around the world, we now have the opportunity to effectively learn from the lessons we've gained over the past 10,000 years and design a new form of currency or value. What you're saying about about contracts in the blockchain, Bitcoin as a protocol is much more than simply currency. We're about to see a new system that's been designed specifically in a world where the internet exists expand at an exponential rate. And this is measurable. You can go take a look at the power that's being associated with it. It is to a T following an exponential curve in terms of growth. So where that leads us, if you think it's going to follow that curve, you should be able to find your answer. But again, this is going to be the biggest value transfer in human history, and it's about a lot more than just currency.
So can I make one other point? I think one of the really critical issues underlying this whole phenomenon is the question and issue of trust. So you raised the point about to the audience here, do you trust your banks? And you raised the point of, do you trust the central bank? And so, I think one of the big questions for the future of Bitcoin is this issue of trust. And frankly, just to be the skeptic on the panel, I think we have to ask some questions about the trust in the institutions around Bitcoin right now. I mean, it was created by, the code was created by, we were just talking about this, a person, Satoshi Nakamoto. We don't know who he is. that people are reading in our newspaper and others about what was it, Mount Gox, that just lost all these people's money. And you're hearing other stories about some of the evangelizers of Bitcoin who are involved in drug trade. And, one of the benefits, I think, of Bitcoin is that all of this happens on the internet in the dark without the view of regulators or financial institutions. So I agree with you. One of the reasons I think that Bitcoin has captured people's imagination is because we had a financial crisis, and as a result of that, a lot of people don't trust the world's central banks, and they don't trust the banks the way they did 10 years ago, and so they're looking out and they're saying, oh, here's this new thing, here's this new way to get around it. I've got some of my own skepticism about Bitcoin. As this medium of exchange, I do think there's something in the network that I want to learn more about. The one final thing I'd say on central banks and all the reserves that they pumped into the banking system is, in writing about the Fed for the last 5 years, people have been telling me for years now that we're going to have an outburst of inflation, that the Fed is destroying the value of the dollar. But the value of the dollar has actually been extraordinarily stable. The value of people's wealth has been very unstable, but the value of the currency, the money that we use, has been extraordinarily stable for the last few years.
So that's true. Again, it has been stable. The question is, what's going to happen in the future? Okay, when you've got a situation where you've got extraordinary, we've never had a situation in terms of the Fed, in terms of the size of the QE, we haven't been there. So the question is, what will happen in the future? The whole idea of Bitcoin is actually you do something where you have the minimal level of trust. Like I said Bitcoin and contracts earlier. Well, if you've got trust, then you don't need a contract written down or anything like that. So if interest rates go to 4%, by the end of the year, you pay me $100. And I could just go to one of you and we could shake hands on it. And that demands trust. Now, what the blockchain offers is a way to do this with the minimal level of trust. It is in there, it is secure, nobody can hack it, and it's a rule. And I think that the trust is really important in that it's the minimal level of trust that's necessary.
But you have to trust the institutions that are managing.
Okay, there are third parties. There are third parties like Mt. Gox. And there will be issues. This is a very young currency or system, whatever you want to call it. And there's going to be a lot of growing pains. Mt. Gox is a great example of a particular situation where I described it as the largest heist, bank heist in history. There's one that was close, and depends on how you want to view it. When Saddam Hussein ordered his son to withdraw $1 billion from the Central Bank of Iraq in 2003. But people say, well, it's more of a withdrawal than a heist. So this one was substantial, but again, it is just part of the process with the new technology, and this was a third party.
Look, I would take it even a step further and say Mt. Gox is a prime example of why we can't have any centralized entities. Because when you have a target like that is holding funds, that has access to it, someone is going to go after them. It's way easier for me to go rob a bank than it is to go rob 100,000 of you, right? They're going to target them.
Right.
In the future, and this is an example of a growing pain, we will not have centralized entities that control funds. They simply will not exist. And Mt. Gox built their system in such a way that they weren't aware of the capabilities of what Bitcoin offered from the get-go, multi-sig, right? The requisite of having a multiple signature process so that only with your direct authorization can they move the funds. Even though they hold a key, they could not steal your key if they had built this in the correct way.
So can you explain to me, I'm still learning about this. So let's take the future. Let's take 30 years in the future. I'm still working, God willing, and I'm earning an income. Okay, I'm bringing in money and I'm saving it and I'm using that money to pay for things and save it. Where does my money go? How is it managed? And if it's not being managed by some institution, if it's not being stored in some place that I know and trust, where is it being stored?
And Eric, if you can, extend that into a little bit more of a conversation about adoption. We've been talking about the system for a while. Give some idea of what adoption looks like over the next 5 years.
Sure.
And answering that question.
And also, one of the last questions, what is it being stored in? Is it being stored in Bitcoins or in dollars or some, newfangled word?
Yeah, absolutely. Bitcoin is 5 years old, right? So we're seeing the growing pains. I like to say that we're just graduating from embryonic stage into infancy. And we have a whole, toddlership, childhood, adolescence, before we even remotely get to adulthood. So that being said, the adoption rate over the past 5 years has been pretty incredible. We've seen this exponential curve, like where at first it was only a few people using this version 0.1 of the software, which was simply capable of transmitting numbers. And let's talk a little bit about the protocol so we can understand what's happening here. Bitcoin aren't actually stored anywhere. They're locked up in something called a transaction that simply has a set of inputs and a set of outputs. Those outputs are generally addresses or a script that defines how you can move that money to the next location. It doesn't ever actually exist on your computer or anywhere, really, other than representing it as an idea that's emerged out of a series of transactions. You can think of Bitcoin and this idea as a double entry. Are you familiar with double entry accounting, right? Bitcoin is effectively triple entry accounting, where the blockchain resolves any disputes between the two other entries that might exist. So when you're storing value somewhere, what you're really talking about is the fact that there's been a certain number associated with a transaction in the past that is now associated with you, that you have again, a very important point, the potential to spend in the future, that it only manifests when you present a set of special keys that allow you to manifest that value and move that potential to another location and store it as a potential. So there's no physical thing that gets stolen here, like in the case of gold or in the case of another asset that you might store even in a central bank as your investment or your nest egg or whatever that might be. But rather, you have a set of keys in the simplest form that grant you access to move that potential. So from a technical level, when you start talking about multi-sig, you can set it up in such a way that you can authorize third parties to be a part of an authorization so that they can act on your behalf only at your request. Or maybe when your phone gets stolen, nothing actually gets lost because you still have two other keys elsewhere. There's mechanisms by which you can print off these keys and store them in multiple places and require the reconstruction of them. And the adoption of these features is going to require the growth of Bitcoin further. We're going to have to keep running into these little hiccups every now and then.
There have to be institutions that are doing.
Doesn't-
I'm a layman. I
Sure,
don't know.
sure.
I don't know about signatures and all.
Sure,
that stuff.
absolutely.
So I've got to have someone managing
Absolutely.
it with me and for me.
The
right?
role of this is heavily reliant on the entrepreneur. This is such a high growth space that someone enters into the industry and can build an amazing wallet that manages these complex things behind the scenes for you, right? So that you don't even have to know how that works. What you do know is that you have a wallet and you have a way to move your money. And you don't have to trust another entity to do that for you. And these entrepreneurs will enter the market and their businesses will succeed on the very principle, or fail in the case of Mt. Gox, right? Where if they're doing it wrong and they do poor business practices, they fail. There's no one there to prevent them from failing and sustain them for another 100 years.
But my question is, how is that different from what a bank does? Isn't that what a bank does?
Well, there are certain things that are not happening right now that banks actually do. So when I use my credit card, yeah, it's true the retailer hates it because they got to pay 3%, and the presentation said that the margins are often slim in retail. They definitely are. So the retailer would much prefer that I use a Bitcoin. They save the 3%. But we need to remember that sometimes I'll use that credit card as a device to borrow money. So I don't have the actual money. I'm using it for credit. It's not a debit, it's a credit card. So one part of the system that does not exist right now, that potentially could exist in the future, is a way to effectively go out and borrow Bitcoin. That isn't there right now. And you can imagine that if you actually borrow in Bitcoin, then you would actually get some sort of rate of interest for that. So this is just one of the possibilities of Bitcoin in the future that doesn't exist today, that actually, compared to banks, is a disadvantage. Because right now, in the current form, Bitcoin cannot disintermediate all of the banking functions, because a huge amount of what happens in banking today has to do with borrowing. And that just isn't there right now.
So I will say that I know of several entrepreneurs working on things like puts and call options directly in cryptocurrency in general, but Bitcoin very specifically. And that's going to see the increase in robustness.
So
Yeah.
actually, a former Fuqua student called me, and basically he's starting up a firm that does options in Bitcoin. And I said, I guess you didn't take my course. So what we need right now is not options, because Bitcoin, one of the main hurdles right now is that it is an unreliable store of value. The volatility of Bitcoin on an annualized basis is 120%. Okay, so it just massive swings. And we've just seen a swing down 50%. Okay, to give you an idea, the stock market is about 15%. So this is like 8 times more volatile than investing in the stock market. That just can't work in terms of the future. It is a huge hurdle. So the last thing you want to do is to do options, because options are already volatile. So you layer more volatility on something that's got 120, that's not going to work. What we need is some way to both buy and sell. Right now, you can't short Bitcoin, for example. We need a way to do that first on an exchange like a futures exchange. We need something that calms down the volatility, because I think it's the major hurdle right now.
Yeah, absolutely. Those are examples of more entrepreneurs where people are already springing into that space. So you can take a look at Kraken is planning to offer this. What is the other one? There's a number of exchanges that are trying to move into that, but the most important thing is they want to move sufficiently fast to be first to market and gain adoption, but they also need to move sufficiently slow so as they adopt the correct technical solutions. Otherwise, they end up in Mt. Gox situations, which is why I think Mt. Gox is a great example of the market at work. The fact that we can now learn from what happened at Mt. Gox and know that we need to be very careful about how we behave and how we act as businesses and entrepreneurs to enter into this new economy effectively.
So we are nearing the end of our time, guys. If you could just say,
get many questions in.
well, we're gonna let the crowd get some more questions in.
Okay.
But if you guys have just a couple minutes, if there's anything else you want to say closing before we open the questions up to the crowd.
Well, my final point is it just strikes me that so much of what we're talking about, interest in this Bitcoin world and borrowing and financial intermediaries to help you put your property and wallets, it sounds to me like what we're talking about is remaking the financial system that we've already got. So for me, the really big question is, what problem is this phenomenon solving? Does it allow us to transact at a lower cost? Maybe the payment system around it does that. Is there more trust inherent in it than there is in the financial system that we've got? I've got my doubts, but I think that's the big question, because everything here that we've talked about, it doesn't sound to me like the internet, which was clearly something completely and utterly new. It sounds to me like remaking what we've got, and so it just brings me back to the question I started with: what problem does it solve?
The answer is yes. We are rebuilding the financial system, but this time using something that does not rely on a central party. And the problem that we're solving is liberty. We need financial freedom from outside third-party actors who can influence and effectively wash away your hard-earned work. The US dollar has lost 95% of its value since 1913. If that doesn't scare you, I don't know what would. The fact that if you can have $1 in your bank and it be worth less tomorrow than it was today, that's a very scary premise. And that's something that is, by and large, outside of our control. The problem that Bitcoin is solving is the restoration of liberty and freedom to the individual, rather than being reliant on a system that's outside of their control.
Campbell.
Well, I think it's very misleading to say that $1 100 years ago is worth only a fraction of what it was back then. And the reason is that I don't take that dollar and I actually do something with it. So I would invest it, I'd buy some land, I would invest in a bond that at least covers expected inflation. So to me, it doesn't matter that much in terms of what the value of the dollar is. If you've got a diversified portfolio, you can make out fine. So I don't really buy that. And Bitcoin's got its own problems, right? This 21 million limit, as is mentioned, is going to guarantee deflation. And actually, it's not just the 21, because people lose their Bitcoins, right? Even Mt. Gox, like, oh, we found 200,000 Bitcoins. We thought they were lost, but we found them. So given that the actual Bitcoin will decrease, that will guarantee deflation. Deflation is a problem in economics because you don't want to spend, you want to wait because the price is going down. Okay, so I think there's problems on both sides that need to be addressed. To me, I don't have any problem in remaking our financial system. I think it's unsatisfactory that the U.S. government has to bail out Citibank 3 times, not once, not twice, 3 times. Like how many times? It's ridiculous. And the cost of these crises is huge. Okay, and it's really hard to measure. The cost of somebody losing their job for multiple years and potentially not even being able to join the workforce. There's all sorts of other costs that are really hard to measure. This technology offers something different where you don't need to trust that the central bank is going to do the right thing. It's completely decentralized. It's almost like going back to a barter economy, but in a very efficient way where you've got something else that's tracking the ownership. So I think it's a bold idea. I'm not sure it's going to work, but this is early stage. And I think for all of us, we're looking for something like this that's got a big payoff. It's almost like a lottery, right? So let's take it seriously. Much more research needs to be done. As I was mentioning at lunch, a lot of this is coming from computer science, and we need to inject some economics into it also. I think it's super important. And you need to solve the problem that Jon mentioned. It's got to actually do something for you. So what's the incentive for you to go out and use your Bitcoin rather than your debit card? Okay, so that's super important. I understand the retailer, but for us, yeah, maybe we're not too happy with our bank, but it's got to be bigger.
All right, so we'll open it up to questions now. We have about 10 minutes of questions, time for questions. If you can turn on that mic. And if you can, come up to the mic because we're recording, so.
I was actually wondering if you could explain how Bitpay makes money.
Sure. Well, we charge 0% transaction fees, so that's a great question. We basically let merchants accept Bitcoin directly through us, no problem. We're a software as a service model, so at our base tier, we do like $30 a month. And you get a certain limit of transactions that you can do, and we just get our constant recurring revenue of $30 a month. We offer increased support plans above and beyond that for businesses who might be more high maintenance. So if you need immediate phone support, you might have an enterprise plan where we're earning more to the tune of about $3,000 per month. So it's a software as a service model rather than belaying the cost to the business per transaction. If you want to accept Bitcoin and convert it into fiat currency, because we're a merchant payment processor, you just pay us the monthly fee.
Got it. Can I ask one more quick question?
Yeah, go for it.
A lot of the discussion, I think, was around Bitcoin replacing currency and maybe making it, adding some complex financial products around it and adding some stability, whether it's offering that. What about the other potential that you said it had in terms of, I didn't understand a lot of what the blockchain can do, what the algorithms you use for your law contracts. If it has so much potential, what is it, and what are some other forms that we might see it in other than currency? Because it does sound like it would be very similar in the future than to what we have now.
So like verifying ownership, you get into your car, you have to provide a key, not a physical key, and the chain is checked, you are the owner of the car. It only starts for you. There's no thievery. Your house, the same thing. It is codified, it's private, nobody can hack it and change the ownership. There's many simple things like that that are possible to put in this blockchain.
So not just with Bitcoin, but with public-private key cryptography in general, we get something that's a cryptographic proof of your identity. We can, rather than create contracts with, a computer and a piece of paper with ink and write out a legal contract that has to be enforced by a third party, with the blockchain, we can now put these contracts into digital form, and rather than have a third party enforce them, it's codified, literally.
Thank you.
I'd like to make a comment real quick, and that leads into my question. I think that one of the things, from my understanding, I'm an amateur with Bitcoin, but one of the things that Bitcoin may be trying to circumvent is cronyism within government, in terms of allowing government having the control of the money. They can do special favors for different groups, which in turn will devalue our currency by either printing money or confiscating money, or in other ways borrowing money, increasing the debt, and then giving that to a certain enterprise or individual, and then having those individuals fail or succeed, doesn't matter, but the dollar loses its value. If you have Bitcoin, my understanding is that's impossible because the government doesn't control Bitcoin. But that also leads to my question, is that for example, in 1933, we had a situation where Theodore Roosevelt demanded that every citizen turn in their gold to the Federal Reserve or face 10 years in prison, or the equivalent of today about $200,000 fine.
Yeah, Franklin Roosevelt.
And what's to stop, if Bitcoin does become successful, and one of the biggest advantages the government has, one of the biggest tools they have is the control of currency. They could just simply ban Bitcoin and make it illegal for you to have Bitcoin, and then that will just wipe out the whole thing, and then we're back to square one. So what are your thoughts on that?
So you can look at that as a very political centric view, thinking that one country can ban it and it impacts everyone. So what's going to happen is through natural economics, various entities will compete on that. Where one country is banning it, and we're seeing that today, right? Russia has a very negative view of Bitcoin. China has a questionably negative view, like one part of their government says it's positive and the other part of the government says it's not, that they want to get rid of it. The fact is that you can't take Bitcoin, like you can't stop it. Once someone holds it, I can move it wherever I want. I can either comply with that nation or government, or I can go to another one. And that's really what we're seeing restored here, is like there's no way a single entity can take down Bitcoin, because it's not just one entity. It is truly decentralized. And this sort of cronyism that you describe is a function of any system where there is a centralized authority. Any system. There will always be corruption within that system. It's just a matter of how you manage it. In the United States, we have a arguably effective way of managing it through law and the judicial system, and penalizing banks that misbehave, right? But with Bitcoin, there is no central entity, there is no central place, and that's why it's essential to focus on decentralization of these entities. So not just the currency, not just the financial system, but the entities around them. There's another concept based on the previous question called a distributed autonomous corporation, where an entity can exist that solely exists within the blockchain and is autonomous. It is an autonomous organization that performs a function without human input, without human behavior, and subsequently it can be independent of flaws that aren't coded into it. And being open source, that's a very important principle. Everybody can see that and choose whether or not to use one system or another, because they can see those flaws much more visibly. So it effectively eliminates cronyism.
Well, so, I think governments are noticing Bitcoin and getting involved. You mentioned China and Russia. The IRS just came out with a ruling that it saw, Bitcoin with a small b or a big B. I get it mixed up. But they're going to recognize Bitcoin as property. So, I think that the bigger this gets, I do think governments will get involved. And I also think that cronyism is a fact of human nature that will exist in any organized group that you encounter. Whether it's an organized society with a central government in the middle of it, or an organization that makes cars, and certain people get favored treatment. I think that's human nature, and you can't get around it. Can't get around it. And I think that what we've seen with some of the problems that some of these Bitcoin institutions have experienced is that human nature will impose itself on any society that Bitcoin creates too. But one last thing is, that's why you need rules of a game. That's why you need some kind of organizational, you need a system of laws and rules that everybody agrees upon for the most part to play by.
Right, but that's the blockchain. So that it's algorithmic.
I think the innovation here is blockchain, and we should stop calling it Bitcoin.
Agreed. The fundamental principle here is the blockchain.
Yeah.
We will see a world where there will be a government that is exclusively written into code. There won't be people who are responsible for that. We as the members of that society will be part of a consensus, and we can choose to elect ourselves into that society, or we can choose to elect ourselves into another blockchain society. But the idea is restoration of that liberty and freedom.
All right. So I have a bit of a far-reaching idea about Bitcoin. I've been thinking about this for a little while. Hopefully, as I explain it, doesn't seem too convoluted. But I'm trying to make sort of an analogy with the creation of Bitcoin back to the use of gold as the standard for hard currency. What's the potential that Bitcoin serves not necessarily as the actual currency, but rather as the foundation from which other electronic currencies are derived? So it's very much like gold. We have our greenbacks were based on gold. What is the future of that?
Directly analogous. I think that the question of Bitcoin as a currency is a questionable one. It is very directly questionable. The volatility is a problem. There's all sorts of problems that have to be solved. I think that altcoins is really the question I think you're getting at, and whether or not maybe there's an inflationary coin that doesn't have a cap to the limit, which causes it to be deflationary and people don't want to spend it. Maybe that becomes a transactional currency that you use on a day-to-day basis. But the point is, again, back to the blockchain. It's all going to be blockchain based. This is crypto finance, and it's a new industry that is developing, and everything is, again, going to transfer to it. What you're describing is one of many possible outcomes. It's up to us as individuals and entrepreneurs to sort of explore, research, either whether that be in business or academia, what is going to happen, what are the potential outcomes, and how can we navigate this space that's coming, whether or not the governments are going to regulate it or not, whether or not, it's here. You can't roll back time.
Yeah.
So we have to look into this, and we have to educate ourselves. Education is going to be the most important thing that we can do here. So whether you're an entrepreneur or an academic, you need to start looking into this and start understanding, where does this take us?
Completely agree.
So one important thing, gold actually has fundamental value. So that makes it different than these altcoins right now. So gold is used in technological applications, dental work, jewelry, all this stuff. So there is some value, and that really helps it in terms of volatility. So it's not that volatile. It's 15% like the stock market. So that floor of value, I think, is super important. Right now, we don't have anything like that. The floor of value in Bitcoin is zero. And I think that scares a lot of people. So there could be some innovation. I'm not sure how it would happen to establish some sort of floor on the value.
I'm sorry.
Yeah.
I want to talk about gold, liberty, and central banks. So we had a system in the 1800s that for periods was backed by gold. And we had a system in the 1800s that for periods had no central bank. We had a very volatile financial system during the 1800s. We had a system where there were sometimes runs and people's money disappeared. I think we can romanticize what the world looked like without a central bank and would look like without a central bank. But you need to understand it was a very volatile place. And the reason that the Fed was created was because we had a financial crisis in 1907, where there was a massive run on the banking system. And the reason that the gold standard was wiped out was because there were a lot of reasons for that, but one was it caused a severe deflation because other countries were going off of it. So, I think we need to be careful about romanticizing what the world looks like when there's no central authority creating rules of the game for everybody to play by.
Yeah, but let me say this, that banking system back there was like the Wild West. Why is there a bank run? So basically, what does the bank do? It takes deposits and then lends money out. And often what happens is they lend out a lot more than they have in deposits. Like today, the leverage that banks operate with is in the scale of 15 to 1, which is crazy. Like if you look at any other corporation, maybe they're 1 to 1, they're not 15 to 1. So basically, it's true, the Federal Reserve came in, created deposit insurance to reduce the probability of a bank run. But in the Bitcoin world, this is irrelevant. There's no leverage going on. You look at the blockchain, do you have the Bitcoin to spend? Yes or no. That's it. It's secure, and these problems that arose back in history are because of the disorganized nature of the banking system, the lack of transparency. People didn't really know what was going on in the banks, and that caused these problems. It caused huge volatility. We talk about a business cycle today of once every 7 years. It was like once every 3 years you had a crisis. So I don't think that going to decentralized will take us back to the 19th century.
It was highly decentralized. Any bank could issue a currency.
That's exactly right.
It was highly decentralized in the 1800s and 1700s.
Right, and that's a problem. If you've got all these banks issuing currency, don't know what they're doing, they're lending, questionable loans, stuff like that. This is completely different. We've got an algorithm that's telling us how much Bitcoin is going to be out there, and we get the blockchain determining if you've got the Bitcoin to actually spend. That is fundamentally different.
Yeah, now we have a mathematical proof of existence of this value, whereas before it was very much a Wild West. Banks could issue a currency anytime they pleased. Now we have mathematical proofs that say whether or not a currency is valid or not, or something
In this new world, can you borrow against Bitcoin?
Well, right
I'll
now,
lend you some
Will
Bitcoin.
will it be the case?
Let's leave that.
You can have leverage in this new world. You can
That
have
is
leverage.
We're out of
It's
time,
right now.
guys. We're bumping up against time, so let's leave that question open. I guess you guys can maybe answer that question one day. Go start a company and answer this question of whether we can borrow against Bitcoin. But we're out of time for questions. These guys will be around for a few minutes after the talk if you want to come and talk to them. But thank you, everybody, for coming out. We know it's a Saturday, middle of the day. Let's have a round of applause for our speakers.
Thank you very much.
Thank you to also Hack Duke and Business Oriented Women co-sponsored this with us. But everybody have a great afternoon, and thanks again. We hope you learned something.